Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 6th. Mike Boutros with you on the horn. Good to see you guys. Wondering where some of you guys were on Tuesday. Hey, Pete, Steve, everyone in the room. Good to see you guys this morning. As always, Happy New Year to those of you I didn't see on Tuesday. Sorry about the issue some of you had getting in the room. New setup, new year, just getting a feel for it right now. So good to be back and good to see you guys in the room. So where are we at? We are heading into non-farm payrolls, CAD employment, double whammy Friday. We've had a sizable move in broader risk assets, the S&P, NASDAQ. We saw some pretty big moves, nearly 2% off and more at this point. So we'll hit that pretty early in the session. I do still want to start off with a quick look on where we are on the broader theme, right? We're still heading fresh into the new year, new month. This is where I step back, kind of get a better fix on the weekly charts on where we are in trend. Good time to kind of map out your levels and see where we're heading out as we just head into the January opening range. So there's a lot to look at. We'll hit DXY, Euro, Sterling, Gold from Monday's update. We'll go ahead and hit dollar yen on that breakout, which is already looking like it's fizzling out a little bit, and crude. And last night update was dollar CAD and Kiwi, systematically going through some of the majors here. So let's jump into DXY. As always, any trade setups or questions you guys have, feel free to throw them on the message board at any time. Here's where we stand on DXY, okay? And here's what it looked like back into the start of the week. Resistance is resistance, really nice level. If you guys go back to the previous update, I always provide the link, as always, in November. In our last update on this is the same level. It's the same level. 2020 yearly open. Back then we were looking at 96.50 down into 96.10s. We've kind of stretched that out to that new close high from last week. Gives us 96.15 to 96.67, a little 17 push to the upside. This is still the same level. Again, this was published back on November 22nd. So we ran into it, pulled back. All of December was chop, just into that same spot. You even had a pretty nice outside reversal to the upside, was actually marked by exhaustion. Momentum now ducking back below 70, okay, for the first time in the breach that we've had in a couple of years. Okay, and again, you have downtrend resistance, that yearly open, and the close high from last year converging now on the median line. So we're looking for a reaction here, right? And again, this was the update from the 22nd. Here was what the update from Monday looked like. Just a whole lot of chop. That's still the level of interest. In fact, we actually stretched right into it, just shy of 96.50 and pulled back. Long story short, that's the focus heading into January, is on what we do in this region. Mind you, we do have longer term downslope resistance there. I'm not going to really mind that at this point. It's all about whether we break higher from here. If we do, accelerated push likely to get you 97.70 on a quick spurt. Again, from the broader outlook, this is the weekly chart. But at the moment, we're still below resistance. Now, you take that out of the way, right? You take a step back and say, what do the seasonalities look like for December for dollar? They're not all that good. Last couple of years have been just chop sideways into the open of the year, okay? But if you take a look in 2019, pretty weak until the actual February move is when you broke out. Here's 2018, obviously different part of trend. Here's 2017, different part of trend, but a very, very heavy start. Here's 2016, right? January, pretty hefty drop right into the February open. So we can do the seasonalities. You can look at that from Jamie's side of the page too as well. It's not all that favorable for the dollar, but either way, we're at resistance. So I'm looking to see what kind of play we get into the start of the week, the month. Obviously, we have the weekly opening range in hand as we head into non-farm payrolls. Expecting to see a nice boost to 400. I say a nice boost to 400. That's from the previous dismal read. We got 210. But somehow we're still expected to see unemployment ticked down even lower to 4.1 from 4.2. So that's priced in. We're always trading the deviation from the expectation. So all things held constant, here's the daily chart for DXY. Mind you, the entire December opening range is essentially still in play. You got that one upshot there, but that was a heavy reversal candle. So December opening range is still in play. We dropped right into the 2019 low day close. That was 95.15, same levels here, guys. And that's the focus. Key resistance, key support. Now, if we breach higher, like I said, 96.50 breach would likely see another accelerated rally. Remember, a breach of uptrend resistance, oftentimes the sharpest part of the trend. Monthly open, yearly open comes in just above that 95.55 level, that 2019 low day close. So very nice, essentially the monthly opening range. So keep that in mind. Momentum driving into 50, no tell here. We're looking for that pivot to start off the year. Here's the intraday chart. Okay, and here's what it looked like again on Monday as we were just pushing higher. There's that resistance level. We clipped it, pulled back. Your weekly opening range is set just below resistance. Clear targets on the upside if it breaches. You see 96, 98 and beyond. My ideal scenario is even if this does breach higher, you get that setback, okay? Because if you look at this from all aspects, did this complete even 2 legs lower? The highs were just off, so you essentially have basically a key range in play. So the threat is, if this was 5 waves up, you're looking for the corrective. This could be truncated 4, maybe the 5th wave is still on hand. So not getting aggressive on DXY just yet. The interesting tidbit that we're getting now is this shift in presumably what could be near-term sentiment. So I'm going to jump real quick into the SPX. Any questions here on DXY? Feel free to throw those on the message board. If not, I will jump right in. I just want to show you what's happening now in the SPX. So if you guys remember, this is the weekly chart. Before I left you guys heading into paternity leave and the holidays and the new year and all the awesome things that have just happened in the move, we were talking about the possibility, the threat, okay, of some real corrective action in SPX that was heading into the November move. Right after I left, we got that pullback. It was a pretty sizable pullback. If I recall, it was somewhere in the range of 5% to the downside. There it was on that drop. And here it is, excuse me, right here. Was it 5%? Almost, yeah, 5.27% on that drop before continuing higher to close out the year at a fresh record weekly close high. E-Man says, hello, long time, missing your webinars. Thank God I could join today. That update worked now. E-Man, cheers, great to see you as well. Happy New Year. Hey, Ty, it's great to be back. Hey, great to see you, sir. Always a pleasure. So for the start of the year, we're coming out, nothing's changing here. You're still getting that weekly divergent high. We've been noting that even to the close of last year. We've already marked and threatened an outside weekly reversal off record highs. A lot of people got spooked yesterday. Did anything really change? Fed minutes showed that, okay, maybe Fed members are talking about not only pulling back on those asset purchases and offloading, but also maybe tightening even earlier, right? Spooked markets, whatever. You can run with whatever fundamental stories you hear. At the end of the day, this has been sort of our focus right now. Here's what it looks like on the daily chart. Let me stop talking and jump right in, because this was very exciting to see. This is the same chart I've been showing you guys since last year. Here was November where we left off. We were talking about the possibility of divergence, of a pullback here as we were marking divergence, break. Again, that 5% pullback played out pretty well, closed out the year at fresh record highs. This is the same slope. This is the same slope. This is last year's open, guys. So, well, where can we get a frame of reference? I'm thinking 46.10s. You start to look for initial support. What shows up at 46.10? Well, we can just take a quick look at this. Again, this is all fresh stuff here. If we take a quick retracement of that advance off the October low, yeah, 38.2 there at 46.10. Basic slope off that low would get you something like this. Okay. And the interesting tidbit is if you ditch this and just go with the dominant slope from last year, check this out. We're right on point. Pretty clean, right? Pretty clean. So even if we were to get another, you know, what, 90 points to the downside, 46.10, you'd still be within the confines of the broader uptrend from last year. Basic 38.2 correction from a multi-month advance on building divergence. Sure, I'll take that. More than that, we need to reassess, okay? Anything sub 40, well, it's gonna really be 44.81, this 618 of the advance, but even if we break below here, I think you're starting to get problematic at that point for a threat of a larger correction. We'll get there if and when. The immediate threat though is, even if we get a little bit of a pullback, 46.10 would need to hold. On the upside, you're still working with all slope. So even if we were making new high on divergence, 48.50s could still be on the cards, right? So just some food for thought as we get into the start of the month, the start of the year. This is kind of like pretty crazy how it's still playing out all these 2 months later. Okay, on the intraday, I don't have anything to update. I just wanted to show you, again, here's the November clip that we were talking about. There's the November breakdown. Here's the rally. Nothing really crazy here except just a near-term breakdown or breakout to the downside. Even this looks like it could be a 1, 2, 3, 4, 5. Find some basing today, possibly some recovery. You're heading into, again, non-farm payrolls, major event risk tomorrow on Friday. I also do want to draw your attention to next week's core inflation read. This has been something that's been essentially taking headlines even in non-financial news publications, which is when you want to start paying attention, right? Once it's drizzling down that low, you kind of want to be weary of that. So the core inflation rate, that's scheduled or slated for release on the 12th. That's going to be pretty important. Okay. Again, we got a 4.9 clip year on year for December. The headline read's supposed to be 6.8. Okay, so if you want to really see sort of some crazy stuff going on, I'd have to see how long we've gotten since we've got a read like that. It's been decades. So that in mind, still a lot of event risk right early in the month to assess, but definitely spooking the markets here on SPX. So a quick reference there, out of the loop, but that's number 2, SPX. Could you do crude, 10, 30, silver, gold? I got crude. I'll take a look at the 10-year for you in a moment here, yeah. Silver I haven't looked at, and gold we do have on the list. So Ty, if I have time, come back to me with those, but I've got most of them on the list. So Euro, here's the weekly charts look like. Very similar scenario, no change. Euro right off of major support, DXY off of major resistance. What do we do from here? That is the focus heading into the start of the year. 112.22, the 1618 extension of the decline off the high. Some decent slope here. This is the slope that dates all the way back to the highs he made in, what was that? Close high for 2008. Remember that break? Support, support. Here we are again. Here we are again. For all intents and purposes, that slope that we were working with last year, not only did it break down, but the breakdown of downtrend saw another spill lower. It's exactly what you'd expect to see. Don't want to stick with this, so don't go, that's kind of just in the foreground, in the background there. Major resistance remains 1445 into 1490. It's still, unfortunately, another 50 pip region there of resistance, but look at the pivots that we've seen along that plane. That's key resistance for euro. What do we do in the meantime? Initial support 1290. That's the 618 of the rally. You can see that the weekly candle has already dripped into there and sort of holding. This is a little bit of a different scenario on the intraday. So let's go tighter here for euro. Again, a scenario where, here's the pitchfork, and go ahead and drop that. A scenario where last month's opening range is essentially still intact. Here's the monthly and yearly open at resistance, the former downslope we were following. Here we are sitting at the 618. So if this is a bear flag, or you're still going to see that last leg drop, key support remains 1186. It's exactly where we dropped off in November. Again, here's what we look like on Monday. And here we are still straddling that 618. So while the scalp looked like it was going to be something interesting, essentially all we did was touch in here and continue to set that range. Here's what the 2 hour looks like. Not the cleanest, and that's okay. This time of the year, guys, this time of the month, this time of ahead of all this major event risk that we have, let the ranges settle, and let's just saddle up here as we start to get some of these clear, definitive breaks later in the month. So no plays there on euro. I've been tempted to try a long here a couple times. Would have worked for some near-term price action, but still looking to see if we can't get that Friday click that gives us the clearance. You might fall into that pre-NFP lull tonight, so don't be too surprised if nothing really kind of kicks around. At the end of the day, it's either a break below 1264 for a test of key support, or on the upside, it's still like just shy of 14, 1380s. Monthly open, weekly open, trend resistance. So again, not the funnest. Let's keep the ball rolling here. So that's number 3. Number 4 is sterling. Here's the British pound. And this one, like I said, on Tuesday's webinar, was one of the trades that actually got a decent run with a breakout type of move right into the close of the year, right? So again, I'm gonna take a step back. Here's sterling from 1,000 feet up. The major level of support, I went over this, 32.45 into 33 was critical. We did tempt one weekly close below that. Classic sterling fake out type play, right? Just pips. So grant me that. Nonetheless, this was resistance that we were talking about, and we're basically there now. The swing lows that you had back here in July, decent pivot, former 25% parallel. Here's what it looks like on the intraday, or on the daily rather. And here's what it looked like again on Tuesday. So, or on Monday rather. The focus was this key region. We went right into it, and that's where we're trading. So we opened up near what, 3480s. The level of resistance that we noted was 3567 to 3577. Intraday made a little peak, but that's still resistance. So for all intents and purposes, this thing is pretty darn clean, all right? And even if this is a larger reversal, you're kind of, it's stretched, right? It's stretched. So anything that you're playing, this is the pivot that you're looking for. We would need to close above this. I wouldn't get too crazy about 36.46. It's just a soft target. If we break this, I think you get the larger run. But for now, that's resistance. And it goes along with the theme that you've been looking at. Bucking the trend a little bit, right? Irrespective of what the dollar's been doing, this has kind of still been holding its ground and pushing higher, higher. 35.77 is the level to breach. Key support right to 34 handle. Basic 38.2 retracement. Here's the scalp look like into the start of the week, and here's what it looks like now. All right, so boom, we rallied, pushed right into that mark, and that's where we've pulled off. Your weekly opening range now is set. No sterling data on tap. It's going to be all about what kind of price action you get tomorrow in the dollar. Now, in the event that you get a kick, right into 36.46 and a failure, that actually might be a decent fade position, or even to add if you're trying to fade this for a decent pullback. I'm only looking for a pullback. It was for uptrend support earlier in the week. Now that the time value kind of pushed that out, even a test of the weekly opening range lows would be a test of uptrend support, and that's like 34.20s. So the rally looks good. We're testing uptrend resistance, risk for some setback here within the uptrend. And again, this is a decent pitchfork. November 30th low, November 30th high, that 1 day stretch, and the recent December low. Pretty decent. Questions on sterling? All right, so this is one of the ones I know Iman and Ty, both of you are looking at, and that is gold. What's gold been doing? Well, let's take a quick look here. The levels have been pretty spectacular, okay? On the weekly, first thing we talked about was that basic 618 retracement of the decline. Here's the weekly looks like now, okay? 1829, 1830s basically. You had a 3-week stretch. You opened up the year, the month at that 618 retracement as momentum was at the 50 mark. Pretty tired looking, right? Pretty tired looking. And that's exactly what happened right into the start of the week. This was published again on the 3rd. So before we even get into any of the intraday charts, I just want to continue to drill home where we are in trend. Here was last year, guys. This is all the yearly opens. Here was last year. We've just been in a massive consolidation range, all within the broader uptrend. So people are starting to say, well, it's interesting. We're getting all these moves in gold while we're seeing risk assets also teeter. Guys, don't go for the tit for tat. It's not always going to be like that. Okay, I had even just a conversation with one of the execs at IG yesterday. Why is this happening? How is that? You can't get fixated into this narrative. Whether it's gold up, dollar down, or whether it's stocks up, gold down, and vice versa. We have to take every trade on its own merits. Iman says, very true. I'm short from 1824. Good on you, Iman. Well done. Amazing how your last setup in November 23rd was in the market for a whole month of December. Cheers. Again, Iman, it's not my setups. It's the market setups. I'm just helping you find them, okay? And yeah, you could have worked right off of that previous update. Just for the record here, we'll just take a quick step back to the last update, at least for these longer dated charts. Here was the weekly chart published back on the 16th. That was the high. We were the red flags. We were just, red alert. We came into that level on building divergence. Again, the weekly chart was highlighting a completed 2-leg off the low. Support. Here we are. Again, like Iman says, nearly 2 months later. So this new 618 is the drop of the recent move, right? So you got to update sort of the technical focus of where we are. So enough with the gloat fest. Let's go from here. Where are we now? Here's what it looked like on the 3rd on the daily, and here's what it looks like now. Okay, we're coming into support soon. 1783, 618 of the advance. That's the recent advance off last month's low. Okay, here's last month's open. Here's uptrend support. So if this thing is still going to maintain this broader slope, if we are in this massive basing, as it were, we're looking for support a little bit lower. If this extends a little bit lower. So the daily chart has momentum sort of teetering right below 50 here. I don't want to look into that at all. Near-term price action looks pretty befitting, at least, of a little bit of a drop lower. Again, my humble opinion. Here's the weekly open. weekly opening range break. If this is it, you know, I don't think it's too far to ask 1783, which would be a 618 of the advance. You know, if you want to add some sugar on that, man, I know you're gonna like this. Take an extension right off the high. It's pretty close already, I'll say. Might be farther out, 16.8. So let's say this drives home even deeper. Max 1776. That would still be in line with basically what we're looking at here for a key support zone in gold. Gold looks a bit like we are in October of 2021 range, doesn't it, Michael? Let's look back there, 2021 range. Possible. So sort of like a fade scenario. I want this to shake out. I kind of want this to shake out, especially right now as everyone's kind of dumping on gold, and there's nothing left but, you know, risk assets, especially if they're going to move higher on rates. Well, then that kind of dampens the need for gold, right? If the inflation picture comes out radical next week, I mean, 6.8 in and of itself, even in my career, that's kind of like a radical number. But let's say it comes in even stronger than that. You're going to get that bid back in. If we get further, well, there's a million geopolitical narratives that can come into play. I'm not even going to go there. At the end of the day, this is the level I'm looking for. This is the zone we really would need to see some support if this is going to work. Again, here's the intraday. With non-farm payrolls on tap, right, tomorrow morning. Again, the clip is expected to be 400,000. That's the expectation. Remember, the last read was 210. We're looking for a possible upward revision there as well. So watch the revisions tomorrow. I'll try to keep you updated. I'll throw that on the on Twitter as soon as I see it. Questions on gold? So Ty, I'm not going to lie to you. I haven't really done a revamp of the silver levels. I would expect them to be the same. But you know what? There's nothing like the present. No time like the present. Let's take a look at this. I literally haven't updated this since since I got back. And wow. Well, look at that. This is the same setup, guys. I haven't touched this since last year. Wow. Turn right ahead of the lower parallel on the December drop. Turn right ahead of the upper parallel on this last rally. This looks pretty good. Huh. So this is a larger picture on the daily chart. But let's take a look at the weekly, shall we? So a little bit of a different picture here, Ty. Yeah, not to say that they're necessarily going to diverge, but the corkscrew that you're seeing in silver puts us a little bit in a more treacherous territory. If you were with us last year, remember we were looking at this slope, what looked like a 3-touch, kind of like a fake breakdown. And then here's the pivot, but again, on the whiplash here, I don't want to look too much into that, but it looks like that consolidation formation may be giving way. Let's drop that. Is that still the low day close? Yeah. So the lateral level to watch here is still going to be the same exact level, Ty, we talked about all throughout last year. That's going to be the slope lows from 2020. It's excuse me, from September 2020. It's like 2166. That's what grounded the September decline. That's what grounded this last December decline. That's still key support. Beyond that is still this series of highs and just a 50, plain and simple, of the 2020 range is 2086. That's kind of what put me off on this trade completely into the close of last year, was the rebound that we got there. I was looking for possible failure at the upper parallel, but at some point I must have been looking at this slope on the intraday. Keep an eye on this. This is off the highs from October and November. Okay, you're already below the 618. All right, bear with me 1 second, okay? I just want to see what this looks like, Ty. Okay, so to complete a basic like 618 extension of the decline, you're looking at 2095. So essentially still grounding into the 21 handle, so maybe $1 lower. If you know, we're gonna complete that extension. Now, if we look back at where that comes in relative to the daily charts we were looking at, yeah, it's the same exact level. It's right in that 618 zone. So maybe a little bit lower, Ty. If you're in the trade, you know, you're just kind of chipping away at these major critical pivot points. But that's kind of like your major pivot zone that you're looking for. Again, that's a longer dated 618 of the entire, excuse me, that's the 50 of the entire 2020 range, which was massive, if you didn't forget. Good area. I'd start to look for a little bit more about support pivot. Ty says looking to get long for a position trade. Yeah, so 2089. I mean 21. Start looking for grounding into 21, Ty. That's what I would say. Hey, more than welcome. I appreciate that. Got you on that one. So that's a shotgun approach. We'll continue to track this one. I'm surprised to see that slope wherever whoever asked about this last year, it's the same one still in play. So wow, we did exact 50 pivot there as well. I was on 50 lines, pretty good. Pretty decent. I wouldn't go chasing. I think all these moves are going to kind of teeter out near the extremes, at least until tomorrow. See what kind of data we get on that NFP read. All right, so that is gold and silver. Number 6, 5, and 6. Dollar yen. Lots of fuss is made about the breakout we're in right now. I do think it's stretched. Doesn't mean it can't keep going, but if you're holding longs, this should be an interesting chart for you. This is the weekly chart on dollar yen. We highlighted this, or I highlighted this rather on that Tuesday update. And here's what the weekly chart was doing at that point. We were just probing that August swing low from 2015. 116.08 was our marker that converged, or at least next week or so, continues to kind of be in the same region of this median line for the uptrend we were in all throughout last year, right? Median line break, median line resistance, median line resistance, median line resistance. Now, the pivot for me above 1455, 1490, we were talking about that all throughout last year, was important. I think that was an important pivot, my humble opinion, okay? And we closed above it. Not only did we close above it, but we closed the year above it. Here's the first weekly run. This is gonna be on the back, if it's completed, of a 5-week rally, taking momentum into overbought. You guys know where I stand on these. If you're using these indicators, we take them with a grain of salt. And we just like to study what's been the occurrence the last time we've seen these momentum reads and these types of extremes in price. Dollar yen, actually, all momentum, as I always tell you, can stay into overbought condition for a day, a month, a year. Nothing says it needs to come back. But when we're in that condition and we're at a technical level of significance, it's something to pay attention to. That's all to say, guys. The immediate advance may be vulnerable in the days ahead, just into the open of the year. It's an uptrend. It's constructive above 112.76. Key support at this point, I'd want to see pullbacks hold here if we are heading higher on this stretch. Next upside targets 1690 and 1790. December 2016 high we closed, big level. So don't flirt with this on the long side, in my humble opinion. Remember, dollar yen, typically a really strong reactor to major US economic data prints. So with non-farm payrolls on tap tomorrow, I do think you'll get some play on this. I need to really kind of get a little bit more, what's the word, granular with the daily charts here. They're not too impressive, and they haven't been for a while. So like, what is that? If you take a slope, and again, you can get into an endless kind of rabbit hole with this, but if we take a parallel of this same slope and match it to those highs, you have one touch, two touch, still maybe even a little bit higher from here. That said, look what happened yesterday. Momentum ducked but down. See if we close today below 70. It's dollar yen. This is why we call this trade the abomination. Weekly open, monthly open, yearly open, 115.09. If we get a crack below that, it's going to be a basic, in my mind, that would be a quintessential exhaustion trade. So I don't have the targeted levels I'd really want to pay attention to per se on the downside mapped out here. But here's what the intraday chart looks like as it was last Tuesday or yesterday. Days are all getting meshed up. Tuesday into what it's doing now. You got that rip higher. That was actually the high. We never made it into that confluent zone. And all we've been doing since is ranging. So watch 15, 50. Okay, near-term chart. Can I have the dual chart? Daily. Yes, sir. It's right here. So here's the dual chart. It's not the cleanest, Ty. I hope to get this a little bit cleaner, but I wanted to throw this out there because that near-term slope looks pretty tight. Okay, so quick reminder to anyone new in the room, we do see a couple names here. You can always click on the camera button on the GoToWebinar screen, on the top of your screen, so you can take a snapshot of any of the charts that you see presented during the webinar. And here's the weekly for you. Nothing's changed on that, Ty. Same as Tuesday's update. Okay. Right on. Oil. 7, here's number 8. So crude oil. You guys know I've been telling you I'm a bull on oil long term. Remember, into the close of November, my risk or the thought was there's a huge potential for a large pullback. And that was based on the third reference point of momentum as price was testing confluent uptrend resistance. If that sounds confusing to you, it's just fancy words for saying we're at resistance. Okay, it was a 2013 low. It's been a major pivot in price. This whole zone is littered with them. And again, really clean uptrend resistance. So October came, we started to spill down. Here's November as we were sitting on the median line. And this is where the risk was to the close of last year with the threat of a break lower. Okay, here was the last update from last year. We didn't have a weekly chart on that one. Here was the weekly chart. This was on the 9th. See that? Ended up being the high. Pullback, that was key support. Dramatic breakdown, as you would expect, of uptrend median line support. Took you right into bullish inval, which was 66.57. That held. And here we are. So right into the start of the week, the focus was, well, hold on one second, we're at resistance like right now. And that level hadn't changed. It's the same level from last year. It's 77.37. The bottom of the zone essentially extends into like 75. Again, this is weekly reference points, guys, so we leave those ranges open. But boy, oh boy, once that broke, you would expect to see a breach. Remember, a topside breach of uptrend resistance likely oftentimes is the fastest part of the rally. It could be the fastest part of the breach. Don't take my word for it. Here's a breach of uptrend resistance. Here's a breach of uptrend resistance. Here's a breach of uptrend resistance, right? So there's potential for this to give her a runner. And my whole focus on this since the start of the week was, well, you know, we need to see a pivot here. We need to see a pivot here because I'm not going to buy into this resistance zone. Here's the rip that we're getting. Here's what it'll look on the daily chart, right? Same pivot zone. Same pivot zone. Here's what it looks like now on the daily chart. If it breaches, you're expecting to see a pretty quick ripper. Here's the breach. Here's the quick ripper. So still constructive. I was hoping for a little bit of a pullback, maybe to get long, but it kind of fits. It kind of fits with the dollar, softer story. Gold kind of not really catching that bid. Oil, guys, has a lot of tailwinds. Whether it's domestic production in the U.S., whether it's, I mean, just overall, right? I could go into it for a whole session. I don't want to go there. So watch this. Don't play with it. It could still be a false ripper if we close out the week miraculously somehow below 77. You might get another kind of corrective move where you could get another pullback to get long again. But man, this break keeps the focus higher. Here's what the intraday chart looks like. There's a breach of the weekly opening range, test of the weekly opening range, probably a support. It's a really tight play there, but you could argue. First level of resistance is 80.47. That's 786. High day close from last year comes in at 83.69. Questions on oil. Let me pull the 240 here. This is a 4-hour chart. Give you a little bit cleaner review. Right, so even if we work some parallel action, that's a breach of uptrend resistance. Missed it. If you're holding longs on this, you know, carve away at it, as it were, to take some positioning off, but stops 74.20 or below, just below the, basically your yearly open and your weekly close low, or your weekly low swing low rather. Does that make sense? All right. He said I would have done anything for this work in December. Sorry, Ty. Can't choose when the little ones come or the holidays, my man. I know. I missed some massive moves. The funny thing is, Ty, there was a lot of volatility in December that you could have played for a near-term price action for sure. But the broader ranges, the broader moves, and some of the majors, man, they're still all holding. They're still all holding. So the market will always provide. The market will always provide. This is just kind of staring at me in the face here. Give me a second. Let me just see what this looks like. Okay, pay attention to 83.72. It's the high day close, right, from the October rally, the HDC, but it's also the 161 extension of the events. It's literally dead on 83.72, 83.69. That would be a sort of a critical pivot point for me. Clean that up a little bit. So it's like right here. First things first, this is still a hurdle to jump. So I wouldn't get too excited just yet, but if we do wander up there, that's pretty important level right above, or right below rather, the highs. And that's where a lot of retail will get faked out. So keep your eye on that if we get up there. So I'm not afraid of vol. You find the computer point. Cheers, Ty. Good to see you in the room, sir. All right, so that is oil. Hope that adds some clarity, guys. I mean, it's a phenomenal breakout. It's a great breakout. I wouldn't go chasing if you're not long. Watch these levels on the upside. Initial support 77, essentially 60, 76.87 here. But yeah, I think we're going to see more of this year. All right. Last but not least, last night's update. The last couple 15 minutes here. Let me see how much I can get through. So dollar CAD is going to be huge tomorrow. You have not only U.S. non-farm payrolls, but you have the release of CAD employment data. So I spent some time trying to get some love on this last night. You know, the Canadian dollar in general is typically a really decent play. We got some real chop last year at points, but you know, I kind of had to rework where we were, and sometimes that's really healthy, guys, in your analysis, to kind of just come back, start from scratch, get a fresh take on what price action is speaking, what's saying in the near term and the long term. So here's what we came up with last night. A decent pitchfork, it's a modified pitchfork off last year's lows, has you basically right above the 25% parallel, right below the median line. The median line also converges on the high week close, which we were watching before that last one that we made in December, was just a level at 128.22, right? Converges right on that level. It's also this week's high. So the range is already set just below that. So from a weekly standpoint, man, you don't really have a great positioning, right? You want either the drive lower here for a base, or still want to see that move into 130. We didn't get it. We got pretty close, but last year's, this is the 2020 now, open, a basic 38.2 of that multi-year decline, uptrend resistance. I think, you know, it's warranted. Look to the left, how many pivots we've had in this region. So we just missed that until the close of last year and pull back. What do we do from here? Well, here's the daily chart. Excuse me. All right, so same pitchfork, same sort of angular play. Let me just adjust this just a bit. I'm not sure why that got a little kicked off. And you can see a little bit cleaner here that the median line, pretty decent pivots, converges on that 28.30 level, which is a basic 618 off the high. That's your breakout zone. Support, well, it's pretty well defined as well. It's the basic 50 of the rally from the October low, converges on uptrend support, converges on the monthly and yearly open. That's 26.26, 26.40 right there. That's your range of influence. That's what we're looking to clear. That's what we're looking to clear. Now, if there's a larger correction at hand and the dollar has a little bit more downside draft on it, as we're, you know, threatening a measured move, sorry about that, you know, basically threatens a drop towards 24.70s, like down here. And even that would be within the confines of uptrend support. So in all these scenarios, you're seeing that even if we do threaten a dollar pullback in the first couple of weeks, in the first month or so, it would still be just a healthy correction within the broader uptrend on most of these trades. So looking for some play here tomorrow, specifically, again, 8:30 print, you're going to get both of those releases. Just for your reference, guys, on the Canadian side, the employment change, expect to see the addition of 27.5 thousand. Unemployment rate there expected to hold unchanged at 6%. Employment data out of, Canada is notorious for having massive swings, right? We had 153,000 add last month. So take that with a grain of salt. It's more the deviation of that in combination with what we see in NFPs, which is expected to double what we got the previous month. In any event, here's what the intraday chart looks like. And here's what it looks like, or here's what it looked like last night. So if this is a near-term breakout, and that's what I was talking to you guys right about here last night, if this is a near-term breakout, that's the level you'd need to be. We already talked about 28.30 on that daily chart by measuring that 618. It's also 2 equal legs off the low. And you guys know these are my favorite Fibonacci confluences. A 618 off the high and 100 off the low, or vice versa, right? A 618 off the low and 100 off the high. This confluence zone, they tend to be fruitful. Again, just in my humble experience. So if we do get that stretch, that's where you want to look for the more prominent reaction for dollar CAD. A breach, 28.80, 29.38 is the high day close. I want to see a more assertive move there. Near-term support on a pullback, 27.13. It's last year's open. So it's funny that all the vol that we got throughout the last year in dollar yen, and we are essentially right where we were at the start of last year. So more broader basing pattern, I think the argument can be made. We'll see. So that's dollar yen. Excuse me, dollar CAD. All right. And last but not least, from the updates, so keep your eye on this one tomorrow. If this consolidation break, like I said, watch for the pivot there. At the end of the day, that's near-term bullish inval. If you break the weekly range low, it's an objective short trigger, or at least a sort of indicator. You'd be risking a 618 drop. So that's 25.40s on the downside. We'll see. For now, 28.30s, 28.25. Look for a reaction there if we get there. Kiwi dollar, last but not least, here's what New Zealand dollar looks like. We're at support. This was the level that we highlighted in the report yesterday. It was 67.45. Made quick move in a short order of that in overnight trade. So here's what it looked like, in an early trade this morning. Here's what it looked like yesterday. Clean weekly opening range. We had come right off the September low, right? We had mapped out both scenarios. If there was a continuation higher, the risk was for that rally up towards basically a 38.2 even would get you like the 169 handle. But if you look at this again from the daily chart, looked pretty tired on that rally. Let me take a step back. Here's what Kiwi looks like, guys, on the weekly charts, right? Huge support, 67.02, 67.30s. You had a yearly open, a major pivot in price. That was the origin of last year's late breakout, a 38.2 of the entire rally from the 2020 low, huge level. Okay, we've got an outside reversal candle to the downside. Again, your quintessential exhaustion trade. Here's the pump fake. So we start off the year still sitting at key support. The daily chart looked like this. Last month's range, last month's open, couldn't even get cleared. So it looked kind of pretty tired, right? There's a 50 level right there. Pullback, still 67 is still critical support in the daily chart, which is why on this one, it shows up on the weekly, shows up on the daily, intraday, didn't want to chase it beyond 67.45. So if we break this rendition here, which is again a pretty liberal approach, but if this breaks, you're basically threatening another 50 pips downside for that 67 clip. So I actually think you might find some support here in Kiwi, but let's see how this plays out into NFPs tomorrow. By my part, we're at right near uptrend support for the near-term bounce. Watch for a reaction here. All right, that is Kiwi. Any questions on Kiwi? All right, that's all I got. Ty, would you look at NASDAQ 100? What's the ticker that you look at specifically? I'll take a look real quick for you. Dow Jones, that was an outside reversal yesterday as well. Here is SPX. Didn't get quite the same move there. You're using CFD. So let's just take a look at NAS 100. Yeah, so again, shotgun approach, right? I haven't looked at this. I'm just looking at it for the first time here. This is what the daily chart looks like, right? Kind of toppy, kind of toppy. Now the exhaustion trade is hard to pinpoint the levels because all of these went, virtually AWOL last year. But let me tickle you just a little bit with some of this. Hold on one sec. So basic 38 would be 160. Let me bring up 236 even. These are September lows. Pay attention to 192.74 there. It's going to be a big move right there. Now, this is the daily chart. So it kicks out as a convergence. Well, you can even, yeah, watch this zone right here. It's an interesting zone. If it's gonna be deeper, if it's a bigger problem at hand here, or we're seeing a larger reversal for a larger correction of risk, that's sort of your pivot near term. If you buckle below 192.70s, you're kind of flirting with a larger sort of textbook correction, in which case, 181 would just be like a short-term thing. So that's what I would look like. Again, I don't really track this. I did want to take a look at the 10-year. Someone was asking about this earlier. Look, we've broken out, okay? I'm going to take a step back. This is the daily chart. This is the weekly chart. Here, watch this. So this is the weekly chart. Everyone's talking about the 10-year, the 10-year, the 10-year, and everyone's been talking about the 10-year. But you know what? This is the first actual move that's threatening a larger break of the consolidation that we saw last year. We haven't even taken out last year's highs, so I don't understand, people who are calling for this being necessarily the breakout. Near term, absolutely, we've broken out. On this rally, we really basically got to clear that high close. We're there now, very well could, but trading is an if-then proposition, guys. And from a technical standpoint, I need to stay disciplined. So the HDC, or this is the HWC, right? High week close would need to be cleared on a 172 basically clip on a weekly close, basis. So let's see. Here's what it looks like on the daily chart. I was messing around with this earlier. If this is again very preliminary stuff, guys. I was just playing around with this. But if this is sort of the nature or the slope of the advance, chill right here. You know what I mean? Watch for the pullback. Correction should be held by 150. That's very steep, but that's sort of bullish inval. Top side on a breach, you're looking for 193. That's like an initial target. That's up here. Okay. So yeah, I expect higher rates, but it's not going to be one straight shot. We'll see what kind of employment number volatility we get tomorrow and see if that has any impact on this. But near term, it certainly looks like it's broken in near-term consolidation, not the broader, not the broader pivot that we need to buckle above just yet, though. Not there just yet. Got some nice touches there. And again, just bear with me. Let me see what this looks like. Further out, again, this is a weekly chart, guys. Further out, you've got some pretty nice measured targets. First things first, got to clear the high week close. All right. Oh, and one more thing. Okay, keep those in focus there on the upside. 10-year. All right. That's all I got on my side, and it's 9:30. I got to wrap it up here, guys. Good to be back. Thank you. Good to see you guys all in the room. Aurelian, man, Pete, Steve, Ty, everyone. I'm not going to get to everyone, but thanks as always. Good to see you guys, and happy New Year. Best of luck trading tomorrow. Again, the clip is expected at 400,000 for NFPs. Watch also the labor force participation, not highly talked about, but if we do see a move in the unemployment rate, keep your eye on that labor force participation, because if that continues, or if it does shrink, you're going to see unemployment and artificial downward pressure on it. So it came in at 61.8, which is actually a pretty decent clip. Look at that number tomorrow when you get the release to kind of get some guidance if we see a bigger move in the unemployment headline read. All right, best of luck trading. Have a great weekend, and I will see you guys on Monday for the free session on Daily Effects, and right back here on Tuesday and Thursday. Have a great weekend, guys. Cheers.